April 15th is right around the corner, and if you are a small business owner and not fully prepared yet, this video is for you. I am going to walk you through 6 things you need to either do or know about before that deadline hits. Some of these could save you money. Some of them could save you from penalties. And one of them trips up business owners every single year, even experienced ones. Stay with me through all 6, because the last one is the one most people never think about until it's too late. Let's start with this misconception. Filing an extension does not mean you get more time to pay. If you need more time to file your return, you can file a 6-month extension. That pushes your filing deadline to October 15th. No questions asked. The IRS does not even need a reason. But this part is critical, because an extension gives you more time to file your paperwork. It does not give you more time to pay what you owe. Your taxes are still due on April 15th. If you owe money and you do not pay by April 15th, the IRS starts charging you a failure to pay penalty. That is 0.5% of the unpaid amount every month, on top of interest. And if you do not file at all, the failure to file penalty is even steeper, 5% per month, up to 25% of what you owe. So if you know you are going to owe something, make your best estimate and send a payment by April 15th, even if your return is not fully ready yet. Filing the extension without paying is only half the job. Now, tip number 2, and this is the most interesting one among all. Do you know that you can still reduce your 2025 tax bill, even in 2026? There are 2 ways to do it. First, you actually have until April 15th to contribute to a traditional IRA for the 2025 tax year. Even though it's already 2026, the IRS lets you count that contribution toward last year. If you qualify, it directly lowers your taxable income, which means you pay less in taxes for 2025. The limit is $7,000, or $8,000 if you are 50 or older. Second, and this is huge, if you are self-employed, you can still fund a SEP IRA for 2025. The best part here is that the deadline for a SEP IRA contribution is your actual filing date, including extensions. So if you filed for an extension, you might have time until October 15th to put that money in. You can contribute up to 25% of your net income, capped at a massive $70,000. So if you have some cash sitting around, it's worth looking at today. You are not just saving for retirement. You are basically giving yourself a retrospective tax break for a year that's already closed. Just make sure when you deposit the money, you tell the financial institution that it's a prior year contribution. Hope that helps save you some money. And if you are not sure whether you qualify for this adjustment, a CPA can answer your question quickly, and the answer could put real money back in your pocket. So if you want a CPA to review your situation before you file, there is a link in the description below. Fill out a quick form, and a licensed CPA will reach out to you shortly. Now, let's jump to our next tip. Before you finalize your return, take 15 minutes and go back through your 2025 expenses. You would be surprised what people leave on the table just because they forgot to document it, or did not realize it was deductible. A few things worth double-checking. Home office expenses, if you have a dedicated space used regularly and exclusively for business. You can also deduct business mileage of your vehicle if you drove for client meetings, site visits, or errands related to your business. Any equipment or software can also be deducted if purchased for the business. Health insurance premiums are also deductible if you are self-employed. And you can also deduct professional development courses, books, subscriptions, and memberships related to your field on your tax return. None of these is aggressive. They are legitimate deductions that the IRS allows. You just have to claim them. Now, tip 4 is for planning purposes. This one catches a lot of new and even mid-stage business owners off guard. When you are self-employed, you are responsible for both sides of Social Security and Medicare taxes. As an employee, your employer covers half. When you work for yourself, you cover all of it. That is 15.3% of your net self-employment income, on top of your regular income tax. So if you made a good year but you only set aside money for income tax, you may have a larger bill than you were expecting. The good news is that you can deduct half of the self-employment tax you pay. That deduction comes off your adjusted gross income. But the point here is, make sure you have accounted for this before April 15th. Do not get to the payment screen and be surprised by a number that is much bigger than you planned for. Let's jump to tip 5, and I know you need this reminder. April 15th is also your Q1 2026 estimated tax deadline. People focus so much on filing last year's return that they completely forget that April 15th is also the due date for their first quarterly estimated tax payment for 2026. If you are self-employed, a sole proprietor, a single-member LLC, or a partner in a business, and you expect to owe more than $1,000 in federal taxes for 2026, you are required to make quarterly payments throughout the year. That first payment covers January through March of 2026, and it is due April 15th. If you skip it or underpay, the IRS charges an underpayment penalty. The rate right now is around 6% to 8% annually on what you should have paid. So, as you are wrapping up your 2025 filing, take a few minutes to estimate what your 2026 income might look like and set aside that first payment. Use Form 1040-ES. You can pay directly through IRS Direct Pay at irs.gov. It is free and takes about 5 minutes. Now, tip 6 is the one I mentioned at the start that trips people up every year. If you owe taxes and you do not have the full amount right now, the worst thing you can do is nothing. Do not freeze. Do not ignore the deadline, hoping it goes away. It does not. Here is what to do instead. File your return or your extension on time. That stops the failure to file penalty immediately. Then, if you cannot pay the full amount, you have options. You can set up a payment plan directly with the IRS. It is called an installment agreement, and you can apply online at irs.gov. There is a setup fee, and interest keeps running, but the penalties drop significantly once you are on a plan. The IRS is not looking to destroy you. They need you to communicate, not disappear. File on time. Pay what you can. Set up a plan for the rest. That is the move. Alright, let's do a quick recap. Number 1. An extension gives you more time to file, not more time to pay. Estimate and pay by April 15th. Number 2. You can still make IRA contributions for 2025 right now and lower your taxable income. Number 3. Go back through 2025 and make sure you claimed every deduction you are entitled to. Number 4. If you are self-employed, the self-employment tax is 15.3% on top of your income tax. Make sure you plan for it. Number 5. April 15th is also your Q1 2026 estimated payment deadline. Do not let it find you off guard. And last, if you cannot pay the full amount, file anyway, pay what you can, and set up a payment plan. Going silent is never the right move. If any of this made you realize you need a professional to look at your situation before you file, do not wait. The link in the description takes you to a short form. Fill that out, and a licensed CPA will contact you directly. It takes 2 minutes, and could save you a lot more than 2 minutes worth of headache. If you found this helpful, subscribe, and check out the rest of the channel. There is a full video on quarterly estimated taxes that walks through exactly how to calculate your payments so you never underpay again. I will see you in the next one.